Hi, everybody. Thanks for tuning in today. This video is for you if you're looking for strategies around accessing equity in a property, piece of real estate. You might be a borrower, homeowner yourself, financial advisor looking for strategies to engage with your clients and/or realtor. With us today is Victor Chang, Business Development Manager with Home Equity Bank. Thank you for taking the time to be with us today.
Thanks for having me, Katy.
Very welcome. So tell us just to start, who is Home Equity Bank?
Yeah, Home Equity Bank actually, a guy by the name of William Turner founded Home Equity Bank back in 1986 in Vancouver. So we've been around for what, 36 years now, the original creators of the reverse mortgage product in Canada. Been doing very, very well over the 35 years, but exceptionally well, I think, over the last 5 to 10 years. This past year, we set a record of just over $1 billion of reverse mortgage sales in Canada for 2021, and 2022 is off to, another hot start. I've been with this company for just over a year. Fantastic people to work with. There's about 300 of us in the organization, and we do one thing and one thing only, and we do it really, really well. And it is providing financial solutions to retirees in Canada via the reverse mortgage program.
Awesome. Well, you half answered one of my next questions, which was the fact that, you well know there is a large percentage of people looking to increase their cash flow or equity by using their properties. So do you have any data or statistics on what that percentage of increase is? Obviously, you've just shared volume, but what
Yeah.
percentage of people are actually funding with a reverse mortgage, perhaps in comparison to a traditional mortgage?
Yeah, absolutely. I think, not anything concrete, and I don't want to give any sort of confidential private information out from our organization as well, but we can say that the growth is, getting exponential to a certain extent. Both from a baby boomer standpoint, where you have this huge demographic that is, in that baby boomer demographic, getting into their late 60s, early 70s, and combination of that, and also obviously the home prices in Canada, especially in the major metropolitan areas of Vancouver and Toronto, where your average home price in Vancouver was, I believe, about $1.2 million the last time I checked. And this realization that, oh my God, let's do something, about it, because there is so much equity tied up in this home. So, from a statistics standpoint, like I said, last year we had an incredible year, did just over $1 billion of sales. This year, we're about 40% ahead of last year. So we do the math from that standpoint. It's just been, a great opportunity, not for just only for our bank, but also for clients to learn more about the reverse mortgage program and seeing what, is actually possible with it.
Yeah. So I know what we have seen from the traditional mortgage standpoint is that those who are 55 and older, accessing the reverse mortgage through home equity do so because they're not qualifying underneath the traditional programs, or they want to take advantage of some of the features and benefits that home equity offers that are very different as well. So tell us then, I know this as well, but I want you to share it. What the basics are of a reverse mortgage and how it differs from a traditional mortgage.
Yeah, I mean, I think the main thing with the reverse mortgage, and when we speak to clients about it, is, in terms of mortgages or lending or equity lending on a home, what we usually say is that you've got three options, right? You've got your traditional secured line of credit or your home equity line of credit, which will effectively give you some of the lowest rates possible in a mortgage, unless you're qualified to take like a full-on, traditional A lending mortgage. That's fine as well. But typically, you have your HELOC or secure line of credit, which the interest rates are around 3%, 4% right now. If you can make the payments, that's fantastic, right? You got principal and interest repayments. On the other end of the spectrum, you have a bunch of private lenders, which if you don't have any income or your financials look really poor, sure, a private lender may lend you that money, but then the costs start to skyrocket. Now we're talking about interest rates in the double digits, potentially 11, 12%, if not even higher now that the interest rates in Canada have gone up. Where home equity bank stands in the reverse mortgage is, kind of in the middle where, yeah, you know what? If you don't want to make payments and you don't need 70, 80% loan to value on the value of your home, we're going to provide you a safe, comfortable medium where, the maximum loan to value you can take on a chip reverse mortgage is about 57, 58%. You're going to need to be about 80 years old to get that number. Generally speaking, our average demographic is around 65 to 70 years old. We're looking at a comfortable 35 to 45% loan to value, and you don't have to make any payments, right? And your income qualifications are very little. Your credit qualifications are very, very minimal. We would loan you money on the equity of your home regardless of that. So in effect, that's where the reverse mortgage fits into the scheme of different lending options.
Yeah. One of those key pieces that stands out for me and for my clients is the no required payment. You do have prepayment privileges, and I'll ask you some questions about some common scenarios that'll probably address that situation too.
So the prepayment thing is the huge kind of thing that people don't realize is that they think that, oh, well, if I don't make payments, whatever the interest is going to compound, and we can talk about that in a second as well. But the thing is, with our program, you can make payments if you want to. You can make interest payments on a monthly basis. It can be half of it. It could be all of it. And you can do prepayments of 10% a year as well, if you wanted to.
Yeah. So what are the common myths? And we talked a little bit about this before we hit record, about reverse mortgages, where they've been, where they are. So tell us a bit about the myths, common
absolutely. I think the number one myth is that we're this lender of last resort, right? Oh, if you have a retiree that can't qualify for lending anywhere else, and you're struggling with your income, or potentially, you had a spouse that passed away, and now your old age security, your pension plan income has decreased by half, or you're getting into credit card debt, the home equity bank can assist, right? Yes, we can do that. And for the better part of the 35 years that we've been in business, that was a lot of it. But I think really over the last 5-10 years, it's this realization that shifted from what do I need to what do I want? Because now my home is worth potentially in Vancouver, $2 million, $3 million, right? And we compare that with, some other provinces, say, I think the average price of a home in Winnipeg is about $300,000. People are starting to realize that, hey, maybe I should start planning my retirement a little bit differently. Can I use some of that money in the home to invest in something? Can I purchase a vacation property in Palm Springs? Or, the main one is, can I help my kids out with a down payment, right? So that's number one. So we're not just a lender of last resort. Of course, we do that side of it, but more and more of it is, retirement planning, investment strategies, helping children out. The second one is people think that with the reverse mortgage, the bank owns the home, and, if the value of the loan becomes more than the value of the home because you haven't made any payments and the interest is compounding, that home equity bank is going to one day come knocking on the door and take the home out of your hands and leave you on the streets. That's absolutely not true, and it's never been true for the 35 years we've been in business in Canada. We're a Schedule 1 bank, right? Full financial disclosure and transparency. In addition, we have this what we call a no negative equity guarantee, meaning that you never have to leave the home as long as you make your property tax payments if you're not deferring BC. If you're making your home insurance payments, we're pretty much good to go. We're not going to kick the client out of the home, right? They can stay in it for as long as you want. And if ever the interest rate becomes higher than the value of the home, that's okay. Continue living in it until the day has come where either you pass or whatever reason you need to sell the home. At the end of the day, we can only take back the fair market value. So if your home is worth $500,000 and you owe $1 million for whatever reason because of interest, that's okay. When you pass away, we sell the home, $500,000 is owed. The other 500 we write off as a bank. It's insured on our end.
Really, really important to know, because that's, does the bank own my home? No.
Yeah.
Can I stay in it?
I mean,
And
the
what
way I look at
happens
the
if,
bank,
yeah,
exactly. The
what
way I
happens
look
if
at
the
the bank
values?
owning the home is, you know, many people have had mortgages in Canada, whether it's with a major bank, let's just say TD, for example. Well, if you had a first mortgage with TD Bank when you were paying it off and you stop paying off that mortgage, all of a sudden you spend 6 months not making that mortgage payment. Well, what do you think the bank does? They don't own your home, but they're going to come knocking on the door going, where's our
Oh yeah,
payments? If you
you
don't
miss
do it, we're
one
going to
payment,
foreclose,
they
right?
come
Yeah,
knocking.
exactly. Exactly, right?
So
But the thing with Home Equity Bank is if you don't make payments, we don't come knocking on your door because you don't have to.
let's go through a few scenarios. One you already mentioned, so a loss of spouse, which can
Mhm.
disrupt income, like overall income to the household. There may not be survivor pension or decreased OAS CPP. So
Mhm.
that's one scenario. So I know I've had clients that have had that occur, and with mounting costs, they've used a reverse mortgage to stay in the home. Um, let's use some of the examples that are less commonly known. So where
Yeah.
you touched on this as well, people use it to help their children and or buy an investment property. So can you speak to those two?
Yeah, absolutely. The children thing is huge right now. In Vancouver, we're seeing tons of bidding wars, and the reality is that children are moving further and further away from their parents, taking the grandchildren in tow out further into the Fraser Valley, say Langley, Abbotsford, Chilliwack, and even there, the homes are starting to get pretty pricey as well.
Mhm.
So really stuck for a solution with how do the parents help? Right, if the parents have cash in their pocket, of course we can take that money and give it to the children to help as a down payment. Otherwise, parents potentially selling their RSPs and paying a tremendous amount of tax, potentially losing their old age security. Maybe they're selling other stock mutual fund investments that are generating 10-15% a year of return, and all of that comes with a lot of costs versus, hey, what if we take some money equity out of our home? It's completely tax free. The interest
That's
rate
huge.
is around the 5 and 6% mark. And now my children and grandchildren can live 5 to 10 minutes away from me because they have
Yeah.
that down payment now to be able to do that. Right.
So
And so we
in
go,
that example, if someone had done that a year ago and bought allowed their children to buy a property in the Fraser Valley, they would have seen a 45% increase in the value of what they've already bought just in the last year.
yeah, yeah, exactly.
Yeah. You
And,
mentioned
it's
to
just,
a key point, it's tax-free money because it's basically just
yes,
equity out or leveraged against
yeah,
to provide access to the money so that there isn't
yeah,
any clawbacks for any other
exactly.
benefits that you have.
And I recommend the adult children to speak to their accountant and their financial advisors and really discuss what the most efficient way is to get access to some help from the parents,
Yeah,
from a tax perspective, from a loss. What I call it an opportunity cost, right?
yeah.
What's the opportunity cost of that money,
So
right?
that sort of a strategy is great if realtors are looking to build relationship, because I know all they do is fire out in the mail, just like if you're looking to sell, you're looking to sell, you're looking to sell, instead of presenting a strategy to say, you probably would like to stay. And if you're
Yeah,
looking for ways to use the equity, here are some solutions. Now
yeah,
you've got, say, two kids. These two kids now become two buyers. And then eventually, because you've built that relationship with the seller or the homeowner, they become a seller down the road. So great strategy there.
it's
You've
an
touched
amazing
on
strategy.
a few things around sort of financial planning and estate planning.
Yeah,
So here's
yeah,
where we also work with a number of financial advisors too. Do you want
yeah,
to speak to how people are using the,
yeah.
the program there?
Absolutely. And I came from more of a financial planning background as well for the better part of, the previous 10 years before I joined Home Equity Bank. I had that. I was working with financial planners for the better part of that time. And I think when I started looking at this program and I realized, hey, in Vancouver and in Toronto, homeowners, say retirees 65 years old, have effectively won the lottery. by purchasing a lottery
Yeah.
ticket called their single detached home in Vancouver, which over the past 20, 30 years, maybe they paid, a $500,000 down payment off. Now their home is 2.5 million bucks. Well, what are you doing with that 2.5 million? That's, your
Um,
equivalent 65-year-old counterpart in other provinces, maybe not, they don't have access to that. So what we say is like, hey, if you've got like, $2.5 million home and you're 65 years old, and the average 65-year-old couple in Canada only has about $200,000 saved up in their investment accounts, have we thought about potentially taking six, seven, eight, $900,000 out of that home, purchasing an investment property, a rental condo that could generate maybe $2,000, $3,000 a month of income for that 65-year-old couple, to preserve on the financial side their mutual funds, their RSPs, and don't withdraw from that unless it's
mhm.
absolutely necessary. So you get two things: you get a great income stream from that investment rental property, and over the span of say 10 years, you're also collecting a ton of growth on that condo or whatever you purchased. And before this meeting, I was actually speaking with my mortgage specialist, who's based out of Toronto, and he's actually moving back to Ottawa. And I asked him, what his plans for living are. He's like, I just purchased a three-bedroom townhouse 15 minutes from downtown Ottawa for $350,000. Right. And I said, how much rental income can you collect from that? He said, I've gotten offers for $2,200 a month on a $350,000 condo.
Wow.
And I'm like, that is just incredible. I said, in Vancouver, you're probably looking close to 1.5 to $1.9 million for a townhouse,
Or more.
kind of thing. So, or more,
So
right? So,
lots of
great
different
options there.
lots of different opportunities to use a reverse mortgage. So,
Absolutely.
key components are, you do have to be 55 and older, all owners on title, has to be your primary residence, a few other small things, but those are the main
Yep.
pieces. Is there anything else that we would need to know today for
No, I
watching?
think that's, without going into the little finer details, which, Katie is absolutely ready to go if you want to give her a call. I think at the end of the day, it's about education, right? And I think retirees, 55 and up, 65 and up, you're almost doing yourself a disservice if you don't properly educate yourself about what actually this program can do, what a reverse mortgage
Mm,
can do for your retirement. Assuming that, oh, it's a horrible program, or oh, it's this lender of last resort thing, it's just not correct. This day and
mhm,
age, when you are sitting, basically, when we talk about gifting money to a child, we think about bank of mom and dad. The bank is actually not a TD or an RBC. The bank is actually your parents' home. And is there a way to take that money out and educate yourself on the pros and cons of doing that?
mhm. It's quite lovely actually to see people gifting the funds to their children now and seeing them into the homes now, instead of as it's a part of an estate. It's almost like at that
Yeah.
point you don't want it. It's sort of an
You
odd
know, we're not
time.
talking
So
about we're not talking about gifting your children, out of a $2 million home, gifting them $1 million. We're talking about maybe $100,000 to $200,000. So, there's plenty of money now when your children, need it the most, and there's plenty of money later on, as you pass and you gift that
mhm.
home as an inheritance to your child when they're 70. Otherwise, you can live to 95, 100 years old, and by the time you pass away, you're not going to see where that money is being spent. But realistically, your child's going to be 70 years old as well. What do they
Yeah.
need that money for, right? It just gets handed down further versus your children are potentially struggling, in the immediate term, trying to put diapers on their children, right? And
Yeah.
keeping up with gas costs from going up to Langley or Abbotsford and coming back to visit you, where now there's a really, really elegant solution that's completely tax free.
So I think the main message here is that this is a niche product that serves multiple, facets. So not super niche, but it works for a lot of people. It works for a growing segment of our population. And as you say, it's the business that you're closing increases year over year. So if it is at all of interest to anyone, I encourage you to reach out. I think the thing that I hear the most is, I don't want to bother you. I don't want to ask questions. It's like, please do, because if it's a solution that fits your need and it works, it can do wonders. And we've seen it. I've seen it. I'm sure you have, with all the files coming through. So I wanted to say thank you for taking the time to be with us today and share of your knowledge and insight. But if anyone does have any questions, please do reach out. Happy to answer those questions at any point in time. You may not be ready for this today. It might be in 5 years from now. But as you say, home equity's been around for a long time. So, and I believe again that this product will be available for a long time to come, with the needs and our tightening government rules as it relates to lending. So
Yeah, have a conversation with your children, have a conversation with your parents. We're not hiding anything here. Have a conversation with Katy, and find the best solution.
yeah, yeah, that's with an independent mortgage broker. So thanks again. And again, I'll put all my contact information in the show notes if anyone has any questions. Thank you, Victor, for taking the time.
Amazing. Thanks, Katy. Appreciate it.
Bye for now.
Bye bye.